the type of investor we are, we're a value-add investor. Therefore, we're in the business of buying things and fixing them and then selling it to a core buyer within a 4 to 5 year horizon. So as a result, there was quite an attractiveness of the Dutch retail market, specifically because of the type of vendors we have in the Netherlands today. So if you look at the UK and Germany, which has been a great source of new deals for us over the last 5 years, historically we have really bought from banks, from insurance companies that are exiting certain markets, from securitization vehicles. And all that kind of distress has effectively been worked out in the UK, in Ireland, in Germany. But in the Netherlands, we're actually at the moment still at the beginning of that kind of what I call accidental owners starting to sell their real estate. So from a supply point of view of opportunities, it's a good market for us. And that is also, I think, unique in the Netherlands in the sense that it is combined with a very good macroeconomic picture. So the GDP is growing, real income, real wages are growing, and unemployment is coming down. So these are all very healthy fundamentals that help us to actually achieve business plans when we buy these underinvested, undermanaged assets. So in that sense, the Dutch story is quite convincing for us because it combines both, I guess, a good macroeconomic picture together with opportunities and accidental owners who are willing to sell without actually squeezing or stabilizing assets.
Well, the graph of investment volume showed that there's a peak in investment volume has been in 2015. And I would dare to say that it is around that level for this year again. So there is definitely appetite from investors for retail. I think the core is very interesting because it provides a stabilized basis, very interesting. I personally would like to mix it somewhat up with some added value retail so that we can add value ourselves. To be not too reluctant or not to be vulnerable for interest rate hikes and to be able to catch that alpha return in the end as well. But I totally agree with Ali's earlier story on fundamentals, and the timing is right. Yeah.
And so, go ahead. Yeah.
Yes, maybe it's important to notice that the share of foreign investment in investment volume on Dutch retail has been increasing the last years. It has been 55% of all retail properties which is sold or bought last year, but it didn't lead to a yield compression. The yield wasn't vulnerable for the foreign interest. The Dutch retail market is large enough to absorb a bigger or a smaller foreign investment. Don't lead to sudden yield compression.
Go ahead, Ali. Yeah.
I would also say that from our point of view, on a relative value basis, the Dutch retail is also quite attractive. And I suspect that the German investors, open-end funds, more core buyers, will come to the same conclusion pretty soon as well. Because currently, I think this year we would be selling about 300 million euros of German shopping centers. So we have very similar assets in the Netherlands, and I would say that on a relative valuation, we're probably buying 150, 200 basis points wider than where we're selling in Germany. And that kind of valuation gap, to me, is not sustainable given the two countries' macroeconomic pictures are actually pretty much spot on.
So from that sense, you think that the difference at the moment between investing in Germany and investing in the Netherlands, that's where there's an opportunity. Correct. In that margin.
Absolutely, and I think the German investors, core investors, will start buying, hopefully in a meaningful way, into the Dutch retail market as well, because they are soon going to be running out of German real estate to buy.